the question a lot of people are asking tonight. With interest rates on the rise once again, how will that affect the hot housing market here in the Tri-Cities region? The Federal Reserve raised its short-term rate today, 0.7%.
John Janko spoke with local real estate experts about how our housing market will be affected by this rate increase. John?
Josh, Sarah, it's still a hot market here in the Tri-Cities. One local realtor tells me mortgage interest rates here are between 6 and 7.5%. But this interest rate hike from the Fed could make home buying more expensive.
The buyer in June that could have bought a $200,000 house, the rates increased almost a total percent. And so they need to talk to their lender again. They may not be able to buy that $200,000 house.
Interest rates going up again. Don Fenley, a market analysis expert for the Tri-Cities, says inflation is behind this hike.
The housing industry is clearly in the crosshairs of the Fed's effort to control inflation. Increasing the rates will continue to have a big effect on affordability.
Fenley says lenders have likely already taken the rate hike into account. For buyers and sellers, it could lead to the market slowing down as the rate hike takes effect.
I suspect that more people will have a wait and see.
Prices are still sky high, but Jackson says demand, while also high, has plateaued. It's caused a dip in sales locally.
We're seeing sales decline just a little bit, but it just barely. Homes are staying on the market for about 45 days.
The local market still suffers from that short supply.
It's a balanced market when we get to 6 months of inventory. So right now we have 1 month, almost a month and a half. We're still a very hot seller's market, even though things are starting to plateau.
A seller's market still, but Fenley says buyers may be starting to gain some advantages.
In August, a little over 300 of the closings, the sellers actually negotiated down their price a little bit.
If you're a buyer, Jackson says you need to be ready.
Call your lender, get your pre-approval letter updated every week or 2 weeks.
Jackson says it's important to have that pre-approval letter updated because rate hikes can drastically change home prices. Fenley says to expect another rate increase from the Fed before the end of the year.